Over the last few months, public disgust for Uber has reached a fever pitch. As the company lurches from one scandal to another, it almost seems like Uber can't catch a break. But taking a look at the company's behavior over the last few years, it's easy to see why so many people are so angry with Uber. If that piqued your interest, then you're in luck, because today we're going to talk about why Uber is hated so much. Why would people hate on a mobility service provider aimed at connecting more people at affordable rates? Well, stay with us as we answer these questions and more. So let's begin the video. Just like all our previous videos, we need to go through the history of the organization and why it became so successful in the first place, to better get an idea of what led to its eventual decline. So let's start off with a little history of Uber. Origins: Paris and rapid growth. Uber's story began in Paris in 2008. Two friends, Travis Kalanick and Garrett Camp, were attending Le Web, an annual tech conference The Economist describes as where revolutionaries gather to plot the future. In 2001, both men had sold startups they co-founded for large sums. Kalanick sold Red Swoosh to Akamai Technologies for $19 million, while Camp sold StumbleUpon to eBay for $75 million. The concept for Uber was born one winter night during the conference when the pair was unable to get a cab. Uber was founded on a single idea: what if you could request a ride from your phone? Initially, the idea was for a timeshare limo service that could be ordered via an app. After the conference, the entrepreneurs went their separate ways. However, when Kemp returned to San Francisco, he continued to be fixated on the idea and bought the domain ubercab.com. Ubercab, the beginning. In 2009, Kemp was still CEO of StumbleUpon, but he began working on a prototype for Ubercab as a side project. By summer of that year, Kemp had persuaded Kalanick to join as Ubercab's chief incubator. The service was tested in New York in early 2010 using only 3 cars, and the official launch took place in San Francisco in May. Ryan Graves, who is Uber's general manager and an important figure in the early stages of the company, became CEO of Uber in early 2010. In December 2010, Kalanick took over as CEO, while Graves took on the title of general manager and senior vice president of global operations. The ease and simplicity of ordering a car fueled the app's rising popularity. With the tap of a button, a ride could be ordered, a GPS identified the location, and the cost was automatically charged to the card on the user account. The San Francisco-based startup quickly became one of the hottest companies and grew rapidly. The first Uber ride was requested in 2010, and less than 2 years later in 2011, Uber had already launched internationally in Paris, where the idea for it first took root. Uber's valuation. Funding rounds. First 5 years, 2009 to 2013. After starting in 2009 and launching its first ride in 2010, the company received its first major funding, a $1.25 million round led by First Round Capital. 2011 was a crucial year for Uber's growth. Early in the year, the company raised an $11 million Series A funding round led by Benchmark, and it went on to expand to New York, Seattle, Boston, Chicago, and Washington, D.C., as well as abroad in Paris. In December at the 2011 Le Web conference, Kalanick announced that Uber raised $37 million in Series B funding from Menlo Ventures, Jeff Bezos, and Goldman Sachs. In 2012, the company broadened its offering by launching UberX, which provided a less expensive hybrid car as an alternative to the black car service. Additional funding and setbacks, 2014 to present. In July 2015, Uber became the most valuable startup in the world, valued at $51 billion after its funding rounds. In June 2016, Uber then raised a further $3.5 billion from Saudi Arabia's sovereign wealth fund. With Uber's rapid growth came many controversies. In April 2017, Uber opened up about its finances for the first time to Bloomberg and reported a global loss of $3.8 billion for 2016. This included losses from its China business, which is sold in the summer of 2016. Without it, net adjusted losses were $2.8 billion. By the following year, the firm's valuation had been knocked down from a lofty $68 billion to $48 billion. In 2018, Japanese conglomerate SoftBank Group, along with a group of investors, including Dragoneer Investment Group, successfully bid for 20% of Uber's stock at this lower valuation, a 30% discount on the last valuation figure. The deal reportedly gave SoftBank 15% in the rideshare company, while Uber got a powerful ally in Asia that could help turn the tide for the company after a few very public missteps. The remaining shares reportedly went to other investors in the group. This period was also marked by other challenges, including the fatal crash of a self-driving vehicle from Uber's fleet. Additionally, on August 8, 2018, New York City Council voted to put a pause on new licenses issued to ride-hailing services such as Uber and Lyft. Uber's IPO. Disappointing feat. Uber's IPO made history as the biggest first-day dollar loss in IPO history in the United States. At one point, Uber was valued at $120 billion by Wall Street analysts, which would have made it the largest company ever to debut on the stock market. After its IPO, it was only valued at about $69 billion, just over half of its high hopes IPO. Uber culture controversy. Kalanick out, Khosrowshahi in. 2017 was a rough year for Uber. The troubles began in February when a former female Uber engineer outed the company for its sexist culture in a 3,000-word blog post. It was alleged that Uber's corporate culture was highly hostile, sexist, and quite offensive to most people. The post quickly went viral, and a number of high-level employees were let go or resigned for reasons relating to the allegations in the following months. Following the blog post, the board called for an internal investigation, which became known as the Holder investigation. It was led by former Attorney General Eric Holder. The investigation resulted in 47 recommendations intended to improve the culture and work environment, and according to Uber, the firing of no more than 20 staff members. In the following months, scandals seemed to haunt both the company and its CEO. Letters were released to the press which confirmed that sexist attitudes came from the top down, including from Kalanick himself. Kalanick was also caught on video arguing with an Uber driver about lowering fares, which did not strengthen his image in the public eye. On June 21, 2017, Kalanick resigned after a shareholder revolt. After a little more than 2 months, it was announced that Derek Khosrowshahi, then CEO of Expedia XPE, would take over. Khosrowshahi came to New York in 1978 with his parents to escape the Iranian Revolution. He started his career in finance at an investment bank and eventually became the CFO of IAC, Interactive Corp, a position he held for 7 years before becoming the CEO of Expedia. As of June 2022, Dara Khosrowshahi remains the CEO of Uber. Uber is one of the most closely followed companies in the world, once going down in history as the world's most valuable startup and disrupting the modern ride-sharing and transportation industry as we know it. Though the COVID-19 pandemic has thrown a wrench into Uber's plans to become profitable, marking huge losses in its ride-hailing business, the company's strategic investments in its food delivery arm, Uber Eats, as well as its recent California Proposition 22 win, bode well for the company. Perhaps soon, time will tell if Khosrowshahi can lift Uber's valuation to its originally projected $120 billion. The problems. During its expansion, Uber has met fierce resistance from the taxi industry and government regulators. As part of its strategy to mitigate the opposition, the company hired David Plouffe, a high-profile political and corporate strategist who worked on Obama's 2008 presidential campaign. Here, we chronicle some high-profile moments of Uber's challenges. Surge pricing backlash. Uber uses an automated algorithm to increase prices based on supply and demand in the market. On New Year's Eve 2011, prices soared to as much as 7 times standard rates, fueling negative feedback from users. Surge pricing triggered outrage again during a snowstorm in New York in December 2013. More recently, Uber committed to capping surge pricing during several blizzards in New York City. In 2014, taxi drivers in London, Berlin, Paris, and Madrid staged a large-scale protest against Uber. Taxi companies have claimed that because Uber avoids their expensive license fees and bypasses local laws, it creates unfair competition. The case was heard by Europe's top court in November 2016. Uber lost its license to operate in London, where the company had 40,000 registered drivers in September 2017. On June 26, 2018, a London judge overturned the ban, effectively allowing Uber to operate under a 15-month license along with conditions. In September 2020, Uber was granted a new license to operate in London. The current license lasts for 18 months and is conditional on Uber providing periodic safety reports. Fair pay and driver benefits. In New York, it became known that Uber had mistakenly charged drivers commissions based on pre-tax earnings, as opposed to after-tax earnings, at a cost of tens of millions of dollars to New York drivers. The company said it was an accounting error, and that it was committed to paying its drivers back in full as quickly as possible. The issue does raise questions about the fairness of who ends up paying the taxes. Driver advocacy groups have argued for some time that Uber is avoiding a tax at the expense of its drivers, something the New York Times found evidence to support. The paper estimated it could have cost drivers hundreds of millions of dollars. On June 13, 2017, a New York judge ruled that Uber drivers should be considered employees as opposed to independent contractors, at least in certain cases. This decision opens up for drivers to receive employee benefits, which would likely have a significant impact on the bottom line. Later, restrictions on licenses by the New York City Council were introduced, which represented a blow for Uber and meant a pause on any new licenses for the ride-sharing service in the city for a 12-month period. Meanwhile, California passed Proposition 22 during its November 2020 election, allowing companies like Uber to classify their workers as independent contractors in the gig economy and not as full-time employees. The Uber-backed ballot measure is now the costliest in California history, with over $200 million spent in campaigning for it. On August 20, 2021, Alameda County Superior Court Judge Frank Roche ruled that 2 sections of Proposition 22 were unconstitutional and that the measure as a whole was unenforceable. However, it remains in effect while its proponents appeal his ruling. Settlements on claims of discrimination, harassment, and hostile work environment. In 2018, Uber paid approximately $7 million to more than 480 current and former employees to settle a 2017 lawsuit alleging gender discrimination, harassment, and a hostile work environment. The lawsuit claimed that Uber used a discriminatory ranking system that undervalued female employees and employees of color. Discrimination against a blind customer. An arbitrator ordered Uber in April 2021 to pay $1.1 million to Lisa Irving, a blind customer. The arbitrator ruled that Uber's drivers had discriminated against Irving by denying her rides or verbally abusing her more than a dozen times. Uber had argued that it was not responsible for the driver's actions because of their independent contractor status. Maybe you start thinking about the competition. Brand reputation problems immediately place companies in danger of losing market share to the competition, said Charles Lindsay, an associate professor in the University at Buffalo School of Management, who focuses on consumer behavior and brand reputation. Whenever a company faces these types of public struggles, it can trigger consumers to say, "Oh, here we go again. Is this a company that I trust? Is this a company that has a good business model?" he asked. And maybe you start thinking about the competition. Uber's core ride-hailing business has never been profitable, as the company instead poured incoming cash into expansion. Adding financial pressure is rival Lyft, which nearly doubled its market share to as much as 40% over the past 2 years, according to its stock market filing. The companies had been locked in a fierce price war to win customers in the lead-up to their respective IPOs, offering steep discounts to attract passengers. Lyft's biggest gains came in the wake of the #DeleteUber movement, which started with accusations that Uber disrupted a taxi strike and spread as allegations of Uber's toxic tech bro culture emerged. Then CEO Travis Kalanick was ousted, and Khosrow Shahi, the former chief executive of Expedia, was brought in to clean up the company's reputation and prepare it to go public. The fallout from #DeleteUber. Uber uses internal tracking tools that gauge brand sentiment in real time and tracks data from outside polling firms, according to former employees who spoke on the condition of anonymity because of separation agreements with the company. It relies heavily on customer email surveys and in-app pop-up questionnaires, which help it measure the all-important level of consumer trust in its brand. While that measure fell steeply during the #DeleteUber fallout, it recovered some last year. It fell again around the time of the IPO and after it, prompting consternation inside the company. These people attributed the reputational declines to a swarm of negative publicity stemming from driver strikes, timed to coincide with the IPOs of Uber and rival Lyft, that helped draw nationwide attention to the harsh working conditions and low pay of ride-hail drivers. That continued a bad cycle of media coverage, including a disappointing IPO and big losses. Just this week, Democratic presidential candidate Pete Buttigieg joined a demonstration outside Uber's San Francisco headquarters, pushing for a state bill to reclassify gig workers as employees rather than independent contractors. Even before that, investors and longtime company observers worried the new CEO spent too much time apologizing for Uber's past mistakes, inadvertently drawing further attention to its problems without a coherent marketing strategy to help it emerge with a new story. While the company tracked its brand reputation before its scandals, the company afterward weighted it so heavily that it may have come at the expense of a broader strategic vision, some people say. Senior executives have paid close attention to the company's reputation and image over the past few months, according to the former employees, especially given Khosrow Shahi's charge to turn the company's image around. Around the time of Uber's IPO and in its wake, the company faced criticism regarding its treatment of drivers and the safety of using the service. Its past cultural woes were again examined. A driver strike gained some traction. Hard partying by some employees as the company went public, the Post reported, triggered bad memories of an Uber many thought had been left behind. Enjoying learning about Uber? Wondering what problems sowed the seeds of hatred and distrust among its customers? Let us give you a hint. There are plenty. So while you think about it, do subscribe to our channel and like our video.